Good morning, ladies and gents. It is Breakfast with the Broker every Tuesday morning at 9 a.m. We have a special guest, a local guest. And, we've been looking forward to this day for a while because a lot of times people don't understand what appraisals are, or assessments are, or portability is. And we have an opportunity to ask her some of those questions. So without further ado, and now, by way of Palm Beach County, she is the Palm Beach County appraiser. She is on your tax bill. She is Dorothy Jacks.
Good morning, everyone. So nice to be with you.
Good morning. So, we really appreciate you coming on and such. And, the Palm Beach County, as a Palm Beach County appraiser, is so important. And, it's funny because a lot of times people don't understand what goes into, the assessments and the appraisals and, the millage rate up, down, sideways, kind of thing. Can you just explain to us a little bit about what the process is to assess property?
Sure, absolutely. Well, thanks first of all very much for having me. It's great to be with you. Valuing property for tax purposes, which is what we do at the property appraiser's office, is really a very statistically driven job, very much involving what does the market say about property values. So every day we are receiving data from the clerk regarding transfers of property, and we're using that data values. We're using the market values that are, people buying and selling property that tell us, what property is worth. And we are basically crunching it into our computer systems. And then from that, making decisions about whether a property, coming down to the micro level, whether a property is increasing in value, decreasing in value, of course, and of course it could be staying the same year over year. Now we're doing that annually for every property in Palm Beach County. And January 1st is an important date because that's the date by which we are obligated to value the property. So even though you get your bill in November of each year, it goes all the way back to what was the status of that property on January 1st that sets its value.
That's great. And, when you're doing those assessments, I guess, some of the questions that I always look at is, why is the market value different than what the assessed value would be? Now, assessed, listen, I don't want you to increase it to the market value. I get a lot of people yelling at me, but but why is that? Why is there a little difference there?
Yeah, so the main reason is that state law says that we can deduct certain things from those market prices that people are paying. Mainly, the big one is cost of sale. So, in other words, when you say you've spent $600,000 on a home, some good portion of that is tied to the cost of sale. So broker fees, fees for closing, fees for filing, and so forth. So we're actually deducting a certain amount from every transaction in order to arrive at what is really the value of the real estate. Okay.
That's great.
Yeah, and that is usually around 80 to 85% of the true market value. So in other words, we're trying to hit a range of anywhere from 80 to 85% of true market. You also have to remember that the timing. So January 1st, again, is when we're trying to value all the property. We're trying to say this is what it was worth on January 1st. And a lot can happen between then and when you get the bill. So you get the bill and you think, well, why has the office gotten my house only at $650,000 and it's worth $725,000? Well, some of that may be also tied to the timing. Value went up during those 10 months or 11 months. And so we're not reflecting that change. That would be in the next year. So yeah, we're never trying to hit 100%. The other reason is, of course, statistically, because we're valuing massive amounts of properties at one time, if we tried to get everybody exact, we'd have people over, and we don't want anybody over 100%. So again, that sort of 80 to 85% of true market, what you actually pay when you buy a property, is where we're trying to hit.
That's great. And do you reassess property when the sale comes? Like if the sale comes in, let's say July or August, are you reassessing that property for the
No.
new potential? No. So,
No, yeah, what people see, and it kind of throws everything off, is that it looks like we're only reassessing when sales happen, but we're actually, the market value of property is adjusting every year. And if you look at Papa, our website, I'm sure your viewers are familiar with our website, Property Appraiser Public Access website. But if you look at the market value for a property, you'll see it change almost every year. There's 10 years worth of history now on Papa, so you can look and see it changes almost every year. That market value changes. But what happens is, because many people are homesteaded and they have a cap on their property, that when that cap comes off when you sell, so it makes it look like that's when we're reassessing, but actually all we're doing is removing that benefit and doing what we call returning the property to market. So it's going to go back up to that market number that has been changing every year. So we are reassessing every year.
Yeah, so I guess if in July someone purchases a property that was homesteaded, and it hits, in August, the market value then would be reassessed. Not that you're reassessing it, but it would be, the number would come off of that homestead, that cap would come off, like you said, and then it would be a higher number, and it would look like it's reassessed, but it actually wasn't. It was just, put back, like you said, to the market.
Yeah, and you'll actually notice that transaction doesn't actually happen until the next year. So if I buy a home in July, I'm going to retain the benefit of the prior owner's cap, homestead, all of their benefits for the remainder of that year. So when my taxes are prorated, it's going to be prorated on that lower amount that the prior owner was paying. But the next January 1st, again, January 1st being really important, we're going to take off that prior owner's cap and homestead, and then we're going to reset the market for that following year.
So if you closed on January 2nd, theoretically, you would get the benefit of a homestead even if you were buying it as an income-producing property?
Theoretically, yes. I will say that what that would require is that the seller continue to homestead on that property, even though they were only there one day. So that's unusual. But if the person sells in March, yes, certainly. But I would be careful though. If you buy in early January, that seller may have gone and bought something else. And if they bought it prior to the end of the year and they moved into it, and they were only just cleaning up things at their old home that you bought, you might not get their benefit because they've gone ahead and moved it already to another property for that January 1st.
Interesting. Yeah, that's it was never explained to me that way, and I think it's now I have a better understanding. Let's talk a little bit about portability. Because portability somehow is some kind of formula that most of us don't understand.
Yeah.
We understand the concept of portability, but maybe the process of how the portability works and how you could figure out. I know that there is a portability calculator on your site and such. What savings are you saving when you're bringing portability over?
Yeah. So portability, needs a couple things to work. One, you have to have had a prior homestead in Florida. It can be anywhere in Florida. That's one of the really nice things about portability. You can bring it from another county, or you can take it to another county. And at that other homestead, you had to have been there for a while to have built up what we call cap savings. So I'm going to use my hands. So if your market value is here, and over the years, because you're homesteaded, your value has only creeped up that 2.3% or 3% or whatever the cap is, you have a difference. You have a differential between your market and your cap on your old home. Okay. That is your portability benefit. So that's what you're going to carry or port from your old home to a new home. Now, filing for portability happens when you homestead your new home. So how it works is you're going to come into the office or file online. We have great online filing in Palm Beach County, but you can file online, come in, and we're going to ask you, where did you used to live? And if you tell us you used to live in New York, well, we're done with you, right? But if you tell us you used to live in Alachua County, it perks us up, and we have you complete a portability application in addition to your homestead application. It's just one more piece of paper you sign. Most people probably don't even notice they sign it. And what we do with that is we find out from the prior home, whether that's in my county or whether that's in Alachua, how much your prior home's cap was, like what that amount was. And then we calculate that off of the market value of your new home. So it's as if on your new home, you have savings right away. It's as if you have a cap savings right away, even though you've just bought a new home. Now, there's a lot of rules around portability. You can only take up to $500,000. So most people don't have that kind of savings, but there are people who do. It's capped at that amount. Nobody gets to take more than that. If you upsize, meaning you go from a home that's worth $300,000 to a home that's worth $400,000, you can take all of your cap savings to the new home. But if you downsize, you go from $300,000 down to like $100,000 condo or something, you can only take that proportion of the value, the old to the new, with you. So that would be a third of your old value, 100,000 to 300,000, right? You take a third of your portability savings. So that's pretty logical. And the reason for that was so that people don't wipe themselves off the tax roll. You know, you don't want somebody taking a huge amount and then they don't pay any tax. So downsizing is important. The other big rule is, at the moment, you only have 2 years to use your portability benefit. So that means that if I happen to have a gap between my two homesteads, and that happens. I mean, a lot of us, you know, sell a home, buy a home, and we're real simple. But some people sell a home because they need to have money to finance building a new home. Some people sell a home and they're not sure where they want to live, so they go and rent, or they go help their mom, or they do something else. You have a limited window to use the benefit. You only have 2 tax roll cycles. So if I sold my home today, July of 2020, I have to homestead either in 2021 at a new home or in 2022. Now, in order to homestead in 2022, I have to own and occupy on January 1st, 2022. So I don't have 2 years. I actually have 18 months to get something bought and move into it to use the benefit. Now, I'm going into this a little bit, but I want to get people to understand this. It's really important. So you don't want to miss that window. If you're not going to buy a new home right away, give us a call and we can go over with you what your dates are so that you know, number one. Number two, on the ballot in November 3rd, there's going to be an amendment to the Constitution that would expand this to 3 years. Okay, so that's a big thumbs up for everyone. I'm not allowed to officially tell you to vote for it, but it's a big thumbs up.
I will tell you to vote for it. Vote for
it. Because what that will do is just give everybody a little bit more of a cushion, because we hate having to tell people that we're really sorry we missed the deadline.
I mean, really, technically, it's only 2.5 years. I mean, in most cases, in most cases.
Yeah, and if you're building a house, especially, that's the people that really got caught in it. Was, if your house takes a little longer to build and you happen to start at the, just the wrong time of the year, I mean, you could lose this really nice portability. And I mean, you've earned those savings. You've earned that portability benefit at your old home. It's terrible if we have to tell people we're really sorry, just by the nature of the calendar, you've missed it.
Now, we have a question from Michael Glickman, and I believe that financing doesn't have any bearing on portability, but he asks, is there portability on a house that has a reverse mortgage?
It really is all about how, I think you can certainly still have a homestead on a house that has a reverse mortgage. So that's how you really get portability. So I'm assuming, yes, you could have portability on a house with a reverse mortgage. And when you left that house, again, it has nothing to do with you selling it or how it's financed. But when you left that house, if you move to another homesteaded property that you're going to live in, then you can take the portability benefit with you. Yeah.
So the longer that you've had a homestead prior, the more portability in most cases that you would have, because the difference between the market and the cap would be, exponential.
Yeah, exactly. And a lot of people, they think, well, where's my portability benefit? And maybe they only lived in a house for 2 years. Some people do turn over fairly rapidly for any number of reasons. And the longer you stayed in your house, the chances are there's more of a gap been created between your cap and your market. And that's where people tend to have more portability. So you do see people who've been in their house 20 years, they have the best portability savings. And of course, what that also is translating to is they're paying less taxes because, of course, at their home where they've been for 20 years, their value that they pay tax on, which has been capped for many years, stays very low. I have this great example. I moved not too long ago, and my old next door neighbor had lived in her home for 25 years, and her taxes were less than $1,000 a year. And when the buyer, who were very nice people, bought the house, they asked me, they said, what will our taxes be? And I looked it up for them, and it was $10,000. I said, welcome to the neighborhood. And I said, that has nothing to do with me.
Here's a cake.
Yeah. So yeah, it's important to use that tax calculator on Papa. I will say that just on that note, when you are looking at homes, if for you or for your clients, you got to use that tax calculator and get a real sense of what the taxes are going to go to when you buy.
So, great explanation. Obviously, you're doing a great job, and we certainly appreciate all that you do. We're changing gears a little bit. So, I think we were talking off air. I was always research the people that come on, so I could give them an introduction and stuff. And I saw a Palm Beach Post article that you did indeed test positive for Corona yesterday. How are you doing?
I'm doing great. I have a very mild case. I'm very blessed. I feel terrible for people who are going through real strife and agony. But I'm starting to wonder if I'm more the norm than not. I just have a lot of fatigue. I'm quite tired, and I've lost my sense of smell, which is very odd. But I haven't had any of the terrible symptoms that we hear about. And the big thing is I've been very vigilant about wearing masks and trying to be really careful when I'm out. And our office is being incredibly careful. We have a full masking policy. The only time you don't wear them is when you're sitting at your desk. And we've really cut back on our meetings, and we do a lot by phone and by video conference now. And, it's going along well, but, it was very surprising to me that I came up positive. But certainly I hope that it's going to be short-lived.
Yeah, I mean, we appreciate you, coming on and really, and I think a lot of times, when people look at the COVID-19, they hear the horror stories and the really bad things, and there certainly are some terrible stories out there. Our hearts do go out to them and the family and the friends around them. But it seems like to me, at least, the more people that I speak to have significant, more mild symptoms. Not to say to minimize this or virus or we still have to be vigilant and wearing masks and washing our hands and hand sanitizing and just being careful with some social distancing practices. But it is good to see that someone like yourself, who tested positive just yesterday, seems to be doing pretty well, and we certainly appreciate it. I hope that obviously that continues and hopefully you get better very quickly.
Thank you very much.
Well, Dorothy, this was really great. I mean, you had some really great explanations. In summary, we talked about portability assessments. January 1st is the assessment date, and we talked about why potentially your taxes may go up depending on when you purchase during the year. We also talked about November 3rd, on the ballot, you're going to want to, I know Dorothy didn't say this, but I did, you're going to want to vote for the extend the portability from 2 years to 3 years. So we certainly appreciate you coming on, and we wish you well. I hope you feel better quickly, and we'll speak to you soon.
Thanks so much. It was great
You're
to
welcome.
meet you. Please have me back anytime. Happy to talk about all kinds of things. Keep an eye out for our proposed tax notice, which we mail in August. And do give my office a call anytime. We've got the greatest people, and they know everything that I told you and more. So give us a call if you have any questions. Thanks so much. It's been great being with you.
Thank you. All right. Be well. Stay safe.
Bye-bye.
Take care. Bye.